The thing that's going to make your small business thrive has nothing to do with some fancy financial hack or a magic formula that will instantly double your profit. As much as I'd like to sit here and say that, and trust me, that would make what I do a lot easier, it's just not the reality. The reality is, to grow a successful small business in 2024, you need some fundamental financial strategies in place, which most business owners I talk to just don't have. I'm Tyler Martin, a CPA with over 20 years of experience working with small businesses. I've built and sold 2 successful companies, and now I help other business owners achieve their financial goals. I've seen it all, from struggling startups to thriving businesses, and I've distilled my 2 decades of experience into actionable advice that works. So in this video, I'm going to take you through those fundamentals and every piece of CFO advice I know. And by the end of these 5 minutes, you'll have everything you need to transform your business finances and set yourself up for sustainable growth. So let's dive right into this to some practical guidance around having financial stability within your business and growing your business through metrics, KPIs, and good financial numbers. The first one, cash flow is king. We hear it a lot, cash flow is king, but what does that mean? You want to understand and manage your cash flow like it's your business's lifeline. This is true. Like, a business cannot be profitable, but if their cash flow is there, they can stay in business. Conversely, a business could be profitable, but if they have no cash flow, they go out of business. So cash flow really is your lifeline. And most businesses fail, not because of lack of profits, but because they run out of cash. A way to work with this, I like to do it, I call it a 13-week cash flow forecast. Implementing this weekly cash flow forecast allows you to look ahead and see if you're going to have any crunches, and allows you to plan accordingly. Tools like QuickBooks can help you do this. Xero is another one. What I generally recommend clients have like a 3 to 6 month buffer of cash flow for operating expenses. This varies, it depends on the business, but having that buffer allows you to deal with things that go wrong. Maybe a large customer goes out of business and you get held up holding the bag of AR and you never get paid off. Maybe a vendor suddenly wants to lower your credit terms and you need more cash flow to pay them. You need the supplies from your vendor in order to make more sales. A lot of things happen in small business that are unpredictable, and if you can have your cash flow projected and you're watching it closely, you can minimize or even completely mitigate when things happen that you're not ready for. Number 2, your financial statements are your business's GPS. What I mean by that is it's really important for you to learn to read and understand your financial statements. There's really 3 financial statements I'd like you to focus on. One is your balance sheet. The other is an income statement, oftentimes referred to as a profit and loss. And the other is your cash flow statement. All 3 of these statements work in conjunction and they tell a story about your business. And the problem is, a lot of people think of financial statements as just for taxes. They're not. Your financial statements are business decision-making tools. What I want you to do with these financial statements is, with my clients, I schedule a monthly financial review. I put together a report for them, and we're talking about trends. We're talking about ratios like gross profit margin, operating margin, net profit. We're setting some metrics and drivers of where we want the business to be. These are huge. They have big impacts to the business. Pricing strategy, for example, that's a game changer. I regularly review with clients, what's your pricing strategy? What are you testing in terms of maximizing your pricing? I had a prospect recently come to me and it just was music to my ears. We were talking about pricing and I was asking him, like, how do you know you've got your items priced right? And he says, well, Tyler, what I do, I've got 3 locations. There was a restaurant and they have various sandwich. I have tested different price points, and then I compare it to my past month sales and I look over the trending, and I'm really confident that I have maximized my price point. As soon as I get to a certain level, I start to see a drop in sales. And that is music to my ears. Most business owners are so scared to test pricing because they're just afraid no one will buy their services or no one will buy their product, and they severely undervalue their products or services, leaving a lot of profit on the table. So I can't stress enough to really test your pricing strategy. Another one is cost analysis. Now look, you got to be careful because cutting cost could potentially reduce the efficiency of your business and even prevent it from growing. So you don't want to just go in and cut costs without really having a strategy for it. Having said that, many businesses just get bloated, like they're not managed carefully Oftentimes they'll delegate things, which is a good thing to do. I want you to delegate things as an owner, but they're not monitored. They're not these, when they delegate things, sometimes we take our eye off the ball and we don't monitor them. What happens is costs tend to get out of control. And I typically, with a new client, there's usually somewhere between 5 to 20% in operating expenses that are just wasteful. There's an opportunity to reduce those expenses with no impact to the business at all. And if you quantify that, oftentimes that goes straight to the bottom line. So it raises your bottom line somewhere between 5 to 20% to your bottom line. If you multiply that times your annual revenue, that's going straight to your bottom line. That means that's going straight into your pocket or straight into managing cash flow. It's a big deal. The next one is systems and processes. I can't speak enough about this. Once your business starts to scale and you start to add employees, having systems and processes allow you to have a consistent delivery method. It allows you to get new employees up and running faster. It reduces the chance for employees to make errors because there's a consistent process and system in place and how to do things. It makes a big difference in your business. And unfortunately, a lot of businesses don't take the time to do this. And so they're like reinventing the wheel or having to take time to redo things over and over that could easily be turned into a process and done the same thing every time. So this is a big thing, especially as you start to add employees. I would even go as far as what I like to do is I like to have staff, when you hire an employee, have them document the process once they understand their job, and then have them put it in a playbook. I've heard people call it a Bible, whatever you want to call it, your process book. Put it in a book, have it, and it's not a physical book. It might be a Google Drive, it might be a Dropbox. Put it in there and have these all clearly labeled by department, by process, by system, and label it out. Now they have software that does this too, but truthfully, I don't think it's necessary to go get the software unless you're like one of those people that like it contained all in one place. Just doing it on a shared drive is great. The other thing I like to do is I like to use a tool called Loom. It does screen recordings. And what you do is you write out your process in a document, and then you make links to your Loom that has the visual demonstration of maybe like a software screen or something along those lines where someone needs a visual. It's a great way to build your processes. Next one is accounting software. It goes without saying, get a good accounting software. A lot of people try to get these free accounting softwares or these ones that aren't used by many companies, and it's shortchanging your business. QuickBooks Online, for example, is a great software for many businesses. Now, if you have a specialty business, let's say you're in government, you're doing government type accounting, there's definitely a lot of packages that specialize in that. But generally for most businesses, QuickBooks Online is the way to go. If someone's pitching you on QuickBooks Desktop, it's probably an old antiquated bookkeeper or an old CPA firm, run. That is not in your best interest. Having it on QuickBooks Online where you can have easy access to it, it's not sitting on someone's computer or in some janky cloud system, just do it on QuickBooks Online. Next one is year-round tax planning. I can't speak highly enough of looking at your taxes throughout the year. Too many times we wait until the end of the year, just stuff everything together, give it to the CPA the day before your taxes are due or a week before, and we get exactly what we put into it. Your CPA is usually at the end of tax season, they're tired, they just want to slam tax returns out, and they're not really putting a lot of effort into making sure your data is good. Now, if you do it proactively and you have them looking at your numbers throughout the year, you have someone helping you get good financial data, you are taking advantage of things and you have time to make decisions. So I can't stress enough, taxes should be thought of year round and the planning should be done throughout the year. This is probably the biggest one. Use data to drive your decisions. Base your decisions on data, not just intuition. Now, intuition does have some role in this, but data doesn't lie. And if you have good data, it just stares you in the face and it tells you what the end results are, what you're doing, what's working well, what's not working well. Now, identify somewhere between 3 to 5 important KPIs and create a dashboard, and have that dashboard released every week. Have a staff member, someone like me, or maybe you have someone in-house, release that dashboard every week, Monday morning by 10 a.m., Tuesday by noon, whatever that time is. Review those KPIs, understand them, and make decisions off them. When I do my monthly report, I call it the critical 4. These are KPIs, but we can look at them monthly. Those are sales, cash, gross profit margin, and net profit margin. Those 4 are critical numbers every month. I want every business owner to know what those are, both prior month and year to date, and manage the business to those. Very important numbers. Next one, really key one, as your business scales, build a financial team. Don't shortcut on this. Hire good people. Start with a good bookkeeper. Maybe even once you have enough funds, bring in-house accountant. Someone like me, a part-time CFO, is a great intermediary between your CPA, who's a tax person, and your bookkeeper or your in-house accountant. You bring the expertise of a part-time fractional CFO to help you strategize your business and make good financial decisions. I want you to focus on profitability, not just on revenue. Too many of us just think about revenue. We think, oh my gosh, we had this much in revenue, but we forget to look at profitability. Profitability is what matters. Just getting more revenue for the sake of it, it's a great vanity number, but sanity is in your profitability. That's a famous quote. Revenue is just for vanity, profitability is for sanity. It's completely true. If you understand the difference between revenue and profitability, and you focus on increasing profitability, you'll make a huge impact to cash reserves that you have for your business, as well as your own salary and compensation that you can take out of the business. Just remember, high revenue doesn't always mean high profit. Profit is a sustainable way to grow your business for the long term. What I do with my clients a lot of times is I regularly analyze their margins, as I mentioned. I look for the ways for them to reduce their costs without sacrificing quality. And I focus on your most profitable products and services to help you really maximize the return of your business. Now, one thing that I see a lot of times, people tell me, oh yeah, my gut feeling is I'm doing really well. I think I'm doing okay. And then you put together the books and the numbers just don't say that. Like they just say, well, your debt went up and yeah, you've taken more draw out of the business, but you just basically traded your debt for draw. Your cash, you don't even have 3 months of reserves. And it's just, once you see the numbers and a clean set of financials, they just don't lie. And too many people, once again, that word intuition, they're just going off their intuition, off their gut, and they don't actually see the numbers. So that's a lot of stuff I've just thrown at you. I know there's a lot here, but if you take any one of these things that I've mentioned, I'm sure you'll see growth in that area in as little as 30 days. Now, I know firsthand how challenging it can be to implement all of these while running your business. That's why I've developed the One Clear Path system. It's a proven 6-step plan that's helped countless small businesses overcome financial hurdles and thrive. If you're tired of stagnant profits and unpredictable cash flow, and you're ready to take your business to the next level, then I have an offer for you. Click the link in the description to book a complimentary call with me. During this call, we'll review your current financial situation, identify your biggest growth opportunities, outline a customized strategy to achieve consistent cash flow and profitability. Remember, I've been in your shoes, I've built and sold businesses, and I know the challenges you're facing. So click the link in the description and get yourself booked in. Thanks for watching. If you found this valuable, give it a like and subscribe for more Insider CFO advice. Check out the other videos on my channel for deeper dives into small business financial strategies. I'll see you in the next video and hopefully on a call soon.